Welcome back to In Business. As you can see, stocks are falling right now. Treasuries rallying on this latest gloomy picture surrounding the jobs market. ADP came out this morning, said companies added 38,000 workers in May, much less than estimated, smallest increase since September. And it's just one more flashing red signal on the economy. Our next guest is with us now and is also lowering his forecast in terms of job creation. Goldman Sachs, Citi did this. Jim O'Sullivan from MF Global is with us now. What are you expecting?
Hi, Margaret. We just cut as well to 90,000 from 150. Now, of course, that comes after the 244 last month. And if anything, there's been a tendency for first prints to be revised up. So it'll probably still be true if you look at it on a 2-month basis. They're not bad numbers, but May itself does seem to be a weaker month, for sure.
What was the trigger for this? Because often with the ADP figure, since it's not a government number, you get the caveat, it's not necessarily correlated with Bureau of Labor Statistics.
And generally, we're pretty reluctant to respond to an ADP report, given how inconsistent and unreliable it's been month to month. But already we were at 150, which was a bit below, I think, what the consensus was. And certainly the weight of evidence has been moving in this direction. Along with ADP, of course, you had the much weaker than expected ISM report this morning for May. So clearly something happened in May. Now, it's still not clear why and to what extent we should extrapolate, but the numbers fell sharply in May, particularly the manufacturing numbers, but not just manufacturing.
And manufacturing was supposed to be the engine of growth here in this recovery.
It certainly has been. I mean, obviously, you look at the cycle to date, and it's been a full-fledged recovery for manufacturing. Now, the drop in this month still leaves manufacturing growing, and still unclear is how much of this is supply chain effects from Japan. We saw, for instance, even in Japan, their PMI bounced back above 50 from below 50. So at least part of this is temporary. But again, it's not clear why the numbers have fallen as much as they have in the past month. So there is a lot of uncertainty here.
When the Japanese event happened, there were so many people who said that's contained to Japan. Yeah, it's the third largest economy in the world, but they've had problems. It's not going to bleed over here. Did we totally misread this?
Probably to some extent, but it's also not clear how much of the weakening is because of that. I mean, certainly part of it is for sure. We saw in the industrial production report for April a 9% drop in auto production in the U.S., even though auto sales in the month of April at least were up a little. Now, today's numbers are going to show a bit of a decline.
Yeah, GM sales not as high as
part of that might be because of shortages after the supply chain effects. Part of it is extreme weather. We did have a record month for tornadoes. Part of it probably is the lagged effect of the big jump in oil and gasoline prices at the beginning of the year. Now, on the positive side, of course, oil has reversed much of that run-up, so there are reasons not to extrapolate all this weakening. But again, it's not fully clear why the numbers are as weak as they are right now.
Yeah, GM saying higher gasoline not helping them. But that question becomes how transitory is that effect or not. But before this week, you were already warning that you were seeing signs of a slowdown.
Well, I mean, certainly the numbers over the past month have clearly come in weaker. I mean, a month ago, we saw the non-manufacturing ISM take a big drop. Now, we expect to see a bit of a bounce back in that number on Friday after the employment report at 10 o'clock on Friday morning. And of course, the claims numbers, which had been moving down through around the first week of April, have clearly moved up recently. Now, some of the spike has been reversed in the last 2 or 3 weeks. So claims are very important to watch. Again, how much of that is supply chain effects or weather effects is still unclear. I mean, certainly if claims end up at 450 on a trend basis, then that's a problem. If they quickly come back to 400,000 or so, then I think there's plenty of reason not to extrapolate this weakness. And we're still quite hopeful, but admittedly, there's a lot of uncertainty here.
Oh, right. And that uncertainty at a time when you're going to see the Fed continue its plan to pull its involvement back from the economy in terms of ending quantitative easing could add to that ripple effect, that worry. We were talking to a bond trader out there who says, yeah, economists may not be talking about it, but out here in Chicago, we're focused on QE3. Do you really believe that's off the table?
Well, I would never say never. If the economy truly falters and unemployment starts going up again and core inflation starts coming down and inflation expectations start coming down, then ultimately the Fed will do whatever it takes. I would say that the bar is higher this time than it was a year ago. Unemployment is lower, core inflation is higher, inflation expectations are higher. Plus, I think the criticism they received last year will make them a little more reluctant to pull the trigger this time. So I wouldn't say never, but I would say we'll need to see a lot more weakness than we've seen already on a sustained basis for that to happen. So it's not going to happen quickly, and I don't think it'll happen at all.
Do we call it something else? Mark Zandi was saying he's already asking for some help in the housing market. Don't call it QE3, but call it something else.
The help, well, they never called it QE2 or QE1 in the first place, of course. They've called it the LSAP, Large Scale Asset Purchase Program.
Sure.
So they don't use the QE term themselves.
Yeah, but I think you meant something more than the linguistics of it, right? But anyhow, Jim, it's so great talking to you, and thank you once again. You reiterating, you lowered your expectations for Friday's jobs number. Now a print of 90,000, down from 150.
Correct.
All right, thank you so much.